Good morning, everyone. Well, in the perennial battle of fear versus greed, fear seems to have won out temporarily, at least in the stock markets. Stock markets continued to fall yesterday on no particular macroeconomic news, even though Fed funds expectations continued to retreat. The Australian and Canadian dollars, two growth currencies, were generally weaker, while all other G10 currencies gained against the US dollar. Nonetheless, we can hope for a better turnout today as Chinese stocks hit a 6-week high on expectations of government stimulus. Many other Asian stock markets were stable to higher, and the S&P 500 futures were up slightly in early European trading. A rebound in stocks, if it happens, would probably boost the growth currencies, the Aussie in particular, and aid in the dollar's recovery. This risk-off period is different from previous ones in that emerging market currencies continue to gain, probably on expectations of lower U.S. rates, which would help the emerging market countries. The big question for me, though, is when will the market start paying attention to Ukraine again? The country's leaders yesterday warned that their country was at risk of being torn apart as armed pro-Russian separatists occupy government buildings in 3 eastern Ukrainian cities. I think these events warrant our attention because an ill-thought-out action by a few hotheads could have larger geopolitical implications that would impact the FX market. It strikes me as potentially negative for Eurodollar, although the pair is back above the 137 level this morning. It's noticeable despite the weaker dollar, lower interest rate expectations, and increasing tensions in Ukraine, gold continues to fall. Although the technical picture remains bullish, fundamentally it looks as if something has changed in investors' perception. The Swiss franc was the best performing G10 currency overnight, indicating some drive for safe havens, yet apparently gold doesn't feature very high among those safe haven assets anymore. This contrasts with the behavior of silver, which gained on the day. For today's indicators, the main one out is UK industrial production, which is expected to have accelerated in February. This indicator can have a substantial impact on sterling, so this could be sterling positive. In Canada, housing starts for March are forecast to be unchanged, 192,000, which would give no impetus. We have 4 speakers scheduled today, including the Philadelphia Fed President Plosser, Minneapolis Fed President Lakota, Chicago Fed President Evans, and the very talkative ECB Governing Council member Jens Weidmann. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.